longer rates are going up significantly. That's a big deal. And what I kind of see going on, Peter, what I think is happening here is that, people are slowly but surely losing confidence in the Fed and beginning to realize that, we are in a situation where the deficits will not stop, cannot stop. And, we've all seen, there's been some really good charts on Twitter, the way that the U.S. debt accelerated right after September 30. I mean, it went up like 500 billion in a week. And it's really, really out of control. And I think the wider world is waking up to it. I mean, a good example of that, I'm sure you saw it, was Paul Tudor Jones saying that, he doesn't see how there's any way out of this without significant inflation. And therefore he's, betting on gold and commodities and Bitcoin. So, to me, that's kind of the story right now. I think the Fed has got to be kind of nervous, right? I mean, they certainly didn't expect to see these sound money alternatives doing as well as they've been doing. And they're comforted, I think, by the fact that the stock market's near record all-time highs. But to my way of seeing it, stock market is very toppy. I mean, it's a huge outlier is a negative that, I think he says, and I agree with him, that it would take a 65% salt fall in the stock market to enter the range of fair valuation as measured by, the metrics he uses. So yes, but to be fair and to understand what's happened, the reason the stock market's as puffed up as it is because of all the free money distortions that occurred, from '08 until present, where, we had ZERP for all those years and QE and so forth. I mean, we're in QT now, but, small QT. But yeah, it's a big distortion. And also, people have been trained to buy the dip. I mean, there really is a Fed put. We all kind of know that instinctively. I mean, in March of 2020, when things started to really fall apart in the COVID example, I mean, Powell came with a bazooka, and I think everybody expects that to happen again. And so, to the degree that, I think the market is saying, well, nothing bad can happen because if we go down, they're going to bring a bazooka and we're going to, go on to new all-time highs, which is entirely possible if we have a crack-up boom. But, whether we do that or not, I don't really know. I mean,
5% were over 40, and I think the majority were under 30. So they
wow.
might have been in the business 5 to 10 years at best. And of course, they were all sharply dressed and they were all talking about, AI and the things they own. And
Sure.
when they read the introduction to what I'd be speaking about later, the MC noted that I would be talking about the BRICS. And one of them turned to the other and said, "Is he going to talk about the housing industry?" And I said, I've had this theory about the market that we have a generation now that, other than a couple quick big hiccups, and they were big, there was crisis, but there hasn't been any real length of time. People forget that going back to from the 40s, 50s, right up to the bottom in the 80s, we had 27 years with the Dow traded between 700 and 1,000.
Yeah,
There's a
that's right.
whole generation that literally was learned to drive on a one-way street. So you look
That's
as a great driver, eh? You look at nobody's coming at me, nobody's at the side of me. I don't got a traffic circle I gotta go. And then suddenly, if that spend 10 seconds about it, this is not.
Yeah,
And then when
it's
you get
crazy.
down to the juniors, I mean, it's
Oh,
just an absolute just
they're
throwing
giving them away. Yeah, they're
it
just giving
away.
them away. Yeah, no, it's nuts. I mean, yeah, briefly, the issue here and the reason why the juniors have not responded, and really the majors haven't responded either, is I think everybody's still doubting this bull market in gold, which is a good sign. It's a wall of worry and no one believes in it. If everyone and their brother thought gold was going to the moon, as a contrarian, I'd be a little scared. I mean, you and I think it's going to the moon, but most people don't. And, you know, in my quarterly report, which is just out, we've got kind of the estimates, and I've seen the investment banking estimates as well. I mean, most analysts in the gold world who write about gold are thinking that in 5 years, gold's price will be in the 2,100, 2,200 level. And I think both you and I would agree that it's likely to be 3, 4, 5, 6,000. So, but if they are right and the price does not appreciate like we expect it to, we do know that the mining costs are going up. The ASICs are increasing, average sales are responding to. That's why gold is at 2,700. But yeah, your BRICS comment is funny. I mean, yeah, there are a lot of things about the younger generations that are funny to me. I was in a situation recently where I mentioned Charlton Heston to somebody young, and they kind of said, "Who's that?" Well, he was a pretty famous actor.
So let me close with this and just your thought on it. So, like I said, I started in 83, 84, and the Dow
Yeah,
had gone between only 700 and 1,000 for like 27 to 30 years. I forget what the number was. And
yeah.
one was expecting, like you said, I can remember when my wife, we first looked, we were just getting married. We looked at a small home, and I remember the lady saying, I think I can get you a 15% mortgage because they had been
Wow.
18 or 20. Okay.
Right.
And anyway, so out came this man. No one knew of him. He came out with a technical analysis, which wasn't big at the time, technical analysis. A little guy from Gainesville, Georgia, named Robert Prechter Jr. called it.
Right now, there's zero responsibility in DC as far as I can tell. I mean, we had a presidential debate where the whole topic of the debt and the deficits and the fiscal condition of the country, it wasn't even discussed. I mean, to me, that was kind of shocking because it really is the biggest threat facing the country right now, in my opinion. I mean, we've got a serious problem here that's not being even talked about.
So, Lawrence, let me ask you a follow-up because you and I
Sure.
probably talk for hours.
Yeah, we could.
So you said something interesting. I agree with you. I think if Trump wins, the market goes higher. There's, this excitement and Musk is going to come around and all. One of the two parts about Trump, and we won't get more into this. We'll leave it just on these two parts. One of the concerns I have is he's talked about a lot of, well, this person won't have to pay taxes, and you're not going to pay Social Security taxes, and firemen aren't going to pay taxes. And listen, if we don't pay taxes when we already have a deficit, the deficit's only going to get bigger. That's
Well,
part of the problem. But the second problem I have is this.
actually, my book is a sound money book. And as you know, I'm a big fan of gold and silver, but I'm also a fan of Bitcoin. But the point of the book, if I were to boil it down quickly, is I want something that anyone can read. You don't have to be, financially sophisticated to understand what's gone wrong and how the U.S. has gotten into the condition that it's in. So I take us through the history and the background of going off sound money and the problems that's created. And I point out some of the really egregious problems and things that have been done. And then from there, I kind of map into what the correct system is, which is a system of sound money based on a monetary unit that can't be debased egregiously, like the dollar. And then I talk about how gold is one good choice in that area, and Bitcoin is another good choice in that area. And the reason that, as you know, I mean, maybe you don't know, but since you've given me the opening, I will talk a little bit about Bitcoin. Um, and a lot of gold guys are against it, and I get that. It's not physical, it's not tangible, but I've always said money is just a ledger. Money, your dollars in your bank account aren't tangible either. But doesn't mean I love gold any less, Peter. I got a ton of gold, I got a ton of silver, and I think they're going to do great.
Well, let me just say this to you after listening to that. If you were speaking for Bitcoin each day and not sailors and Kaisers, to which to me are just snake oil salesmen, I
Mhm.
think more of us so-called gold guys would be more intrigued to learn more about it. You presented in a few minutes one of the most basic but sound principle of that, with not hype, with not fireworks, with not can't miss, and
Right.
which I kind of felt that was moved probably why I wanted to hear from you because
Well, thanks.
that's how you conduct yourself in your
See,
over.
well, thank you. I appreciate that. And you know what? I'm going to orange pill you. I mean, do you know Chris Irons, who runs Quoth the Raven? I
I
don't know.
love it. Yeah.
Yeah, he was very much like you. He was a gold guy, and he just was very skeptical of it. And I keep using this argument over and over again. And I gave a speech at the 21 New Orleans Gold Show, which I encourage people to Google and look at on the value of sound money, both of these forms of sound money, because we're really all on the same team. I mean, if you really look at what's messed up this country and made the pain that we're all suffering through, it's the Fed and the fiat currency debasement. I mean, this country is a mess, and it's a mess because of what they've done to us. And we can't fix it. Red team, blue team shit. That's not going to fix it. We can't vote our way out of it. We got to solve the underlying money issue, and we will. I think because I think it's going to get the problem's going to become so acute that people are going to be screaming for a solution, and we'll get one. But sadly, it's going to have to get a little bit more acute before that happens. Because right now, still, a lot of people aren't aware that this is the issue. I mean, you're aware, I'm aware, gold people are aware, Bitcoin people are aware, but what are we as a percentage of the population?